region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Monday, August 4th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at September corn down a penny at 388.5. September soybeans were also down a penny at 968.5. And September Chicago wheat was up 2 at 518 3/4. No export sales announcements here this morning, so we'll jump right in, guys. Looks to be about 7 days of kind of above normal temperatures as we start August. Little to no rainfall, but that's certainly you start getting into the extended outlook, and the water comes back. So as has been the case this whole season, you know, the longer term forecasts have been disappointing at best, and so we'll just have to see what shakes out there. But I think the fact remains that we will get a little bit of heat this week. Certainly overnight, markets were pretty disinterested. Private estimates should start rolling in this week, which will be interesting to see as well. I think as we talked a little bit about last week, it's going to be a race to write down the biggest number, it feels like. So we'll have to see certainly how the market digests some of these estimates and where we think they're at there. Positive news out of China. Friday, Secretary Bassett, he has hinted that, there's some framework and some things that have been agreed upon, but certainly have to get through the president's desk. So I think, as has been the case for feels like months now, we'll jockey back and forth with headlines here. And I guess to start that, build on that a little bit, Ben, I think you made a comment before we hopped on here this morning. Just a very disinterested trade, and it's been, painful at best to watch. But give us a few thoughts here this morning. We'll throw around the room.
Yeah, this time of year, not uncommon to have the disinterest, but it certainly feels like it's maybe been more disinteresting than we've seen in a long time. I go back over the time that I've been in the industry, and post September 11th was pretty bad. It feels that way. We've got a report coming up. I think there's some expectations there that we're going to see a pretty big yield increase for corn. I still think it's probably whatever they print for beans is a little bit, it's still a little bit early to dial that in completely, although we're getting there. Just not a lot of interest in spite of the fact that we continue to see good business for corn. Big question mark with soybeans still on how things are going to work out with China. We still should be their destination as we get into, maybe forward, possibly oct forward for a little bit. So I think there's still some optimism there that we can do some business. So again, just looks like we have a lot of crops to clear here in the fall. But I think that at least in corn, we've lined up buyers for it. Interesting to note, wheat has been very weak over the last, call it 7-8 days of trading. But wheat in general has covered 45% of their exports in just the very beginnings of their marketing year. So I still think that's something to keep an eye on. But other than that, really not a lot here to get excited about. We've gone 15 or 16 trading days without making a new low in December corn. But we've traded, for 2/3 of that, we've traded within a nickel of it every day. So just not a lot of excitement, period.
Yeah. Dustin, we've got, the worst forward book on for Chinese purchases since I think close to 2005 has been, kind of alluded to. We've talked a number of times about, is ag going to be the the focus of this Chinese deal, and I'm starting to lose a little bit of faith in that. It feels like, and Justin's mentioned it a number of times, but it's it seems like it's kind of a crude oil type of deal, energy markets, chips, things like that. So I don't know. I guess, what are your thoughts?
Yeah, I think the stakes are so high with this AI arms race that's the primary focus, and that's probably where what's probably different this time around with China than last time around. For China, I think the lowest hanging fruit is agreeing to a phase one type trade deal, right? And that might be something that we still could see as a potential. Like that's one of the bargaining chips that I think would be a no brainer for them to, to give the Trump administration a win going into midterms. But I think from our end, it's like, well, what kind of progress did we get on the headway we wanted to on the fentanyl side, on the AI side? It sounds like there's kind of like this, like agreeing to like de-risk from China on both sides, right? They're trying to deleverage and de-risk from us, and we're trying to de-risk from them, which would be probably the most unfortunate outcome, because we're continuing to have to rely on these government payments. At this point in the year, I think finding that demand, corn's trying to find new lows. We're down, within range of testing $4 again on the D25 corn contract. End user side profitable for the most part, and global corn supplies held outside of China were relatively tight coming into that safrinha crop. We had a huge safrinha crop projected, at least. So there's some, replenishment there. We're expecting to see a fairly decent replenishment globally from the U.S. side. But our exports have remained very strong, and, we kind of needed it. We're at this, we're kind of scraping the bin, and it's acceptable now because we've got two hemispheres just cranking out major corn crops. It's coming at the right time of the year, but one crop failure away from being extremely tight again. Global corn stocks held outside of China, so I think that's something to keep in mind. Where we've had really good demand, kind of pay attention to the spreads. We've had a lot of weakness lately. I think rightfully so, because we're coming into this 95 million acre corn crop, and the front end of the market's been the leader in the downside, expecting, where are we going to put this crop? But today we're finding some support in it, and we're seeing the real back up towards 18 again. I would really kind of pay attention to where the Dees July corn spread goes, Dees corn spread for direction. In my opinion, with the ultra high fertilizer prices, you go out to South America is still going to have to experience those as well. What is the commanding price for corn futures going out to the next couple of years, Dees 26, for example? If we're swimming in corn this year, but we still need to produce that crop for the following years, what is that spread capable of getting to? And how does that affect your own farm, the derivatives you purchased? Insurance was set at 470 this year. We've got very strong PLC prices. I know we keep saying this, but it may be a silver lining to have corn go take out $4 and just push deep into that territory, just to trigger a bunch of payments between crop insurance and farm bill, and also at the same time encourage that demand to expand. So, I actually think that a break might not be the worst financial outcome from here, and that's changing the way that we're hedging. But if it rallies, I think with the weather we've had, I think we're ready to sell more too at the same time too. So we're kind of in that limbo zone at the moment.
Well, it's interesting because if you look at it, the let's say new crop corn prices, Dustin, this year, it was $4.80 to $5 were a lot of break evens, or based on costs and everything. We're talking about an increase in fertilizer and some of the inputs for 26 And, if you just look at that, you're 40, 50 cents already in the red. You know what I mean? Like, I think the more and more I talk to growers, it's like something has to shake. Like
Well,
you're going to start 2 years in a row, 40 or 50 cents in the red.
Yeah.
for corn.
Yeah. I mean, the fertilizer one's unique because it's an international problem. But, you just talk about like land values or, seed costs. These things have a really hard time coming down unless you see some real pain, which you're starting to see signs of that. Like, but then you've got things like the Farm Act, 11th hour pass last year, grower direct payments. You've got this recent PLC, Arc County farm reconciliation increases. So you've got a lot of things that are just keeping people on, like hanging on by a thread. Like, and I think that's going to keep a lot of that is what's keeping prices sticky. I think without these things, we'd probably see some pretty deep discounts just because the market would have to, right? If we didn't have these support programs coming in. Now, Justin's alluded to this, like, what does South America have for support programs, right? At some point, if their currency is not dropping like it did last year, it's a 22% drop for Brazil. So just think about, like, you're buying inputs with real, you're taking yourself out of that local currency that's about to have a major drop. You don't know it's going to have a major drop. And then you go sell your output after harvest after a 22% drop in the currency. That's a windfall just because compared to your other, market participants within that economy that are still holding real, you technically outpace that drop in the currency just because you were in a physical asset, right? But you still have to go back and buy those inputs for the following year. If the real is holding steady to higher through that same time frame, I think that the market is. I'd be curious to see how the market changes. Right? I think that the Brazilians would be a much more reluctant seller in a more stable real environment than what we had last year at the current input rate that they're going to be receiving. So that may change the way we what we're capable of doing in the spreads too. We might be more competitive naturally at the back end of the market. That's why, in my career, the most I've ever seen DCDs trade is like 6,500, 6,600. It's late 2008. We have a new set of carry rates, right? Starting December 2019. Full carry is much wider than now than what it would have been in 2008. We have a higher risk-free rate. And we have this high input cost structure all the way out. If we do come out with like a 185, 186 national yield, which is entirely possible, right? A lot of people would say probable even. What's that spread capable of doing? We need to incentivize storage and force convergence. So I think we may, like this again, I don't want to forward project or speculate on what can happen, but I would be curious to see what DCDs is capable of doing. This is the right type of a year to test that, because we have such large corn acres in 2025. And by all accounts, forward demand, strong crush margins, everything points to like natural rotation should go back towards beans next year. And in a way, these 26 corn still fairly tight projected out. It's going to have to maintain some value if it's going to get acres at these fertilizer prices. So it's going to be an interesting end to the year, I think, for how spreads perform. And maybe we're missing something too. Maybe yields don't come in above trend because of tassel wrap or things we just get surprised by.
All right. Well, I'll be interested too to see if some of these, the agronomic programs change a little bit too. That it could force their hand. It's just at some point the grower's gonna. I mean, there's only so many dollars to go so far, right?
Yeah, maybe in mass, but generally in my personal experience, it's like we're not.
That's the last thing. Yeah.
Yeah, we're not divesting from the crop right now.
Right. It's cash rent. I mean, it's gonna be an interesting cash rent season because, the second year you got to go and pencil it out. I mean, there's gonna have to be some give or take as well. Which is that's also a very dicey scenario for some. So yeah, no, it's going to be interesting to see how it shakes out. Right. Interesting enough, also in your markets last week, cattle posting a higher close on the week in spite of the massive washout. So I guess that's a good sign. And then, you look at hogs and they're just kind of at an interesting spot here. So give us some thoughts here as we start the week.
Right, yeah, for all the drama last week, still ended up pretty good here. So I mean, cash ended up squeaking by with $2 to $5 gains. So nothing's really changed all that much. Obviously, we ran into option expiration on Friday, and today is first notice day for August. So still likely to have quite a bit of money moving from a little bit further out here. I think at this point, we're going to be looking at the discount in October and December relative to where futures are and cash is right now. So it just seems like more of the same, really. I mean, even with the break last week, you didn't interrupt the trend at all. And it seemed like, slaughters getting paired back to this point. It seems like there's going to be still a pretty nice level of support in the beef market. I know we're kind of coming out of grilling season for the most part, or at least in the tail end of it. So imagine to see that demand start to continue to kind of weaken the beef market to some degree. But overall, there's, right now the trend really hasn't changed. It still seems like the tight supply narrative is going to be here for a while until we see some real progress with the Mexican border. I think that's really going to be the deciding factor, especially in the feeder market. But still, that will be months out by the time we actually get some better news on that front. So still a lot to look at. It's August 1st notice day, and I think it just overall still going to bring back quite a bit of support in the back end of the market here, at least to start here this week. And then on the hog side of things, yeah, it's just kind of a consolidation, kind of a holding pattern right now. We've had a little bit of kind of push and pull with what's going on with cash and carcass, but it still feels like, generally speaking, demand still staying pretty firm here. And even though we did see a $2 break in cash hogs, but bellies back up in a big way. So I think just that alone given a little bit more of a favorable vibe kind of to this morning's trade, but overall kind of leaning more sideways. I think everybody's a little bit cautious just with the tariff situation right now with Canada and Mexico, and just want to see a little bit better guidance on that. So just waiting for some more headlines, more details regarding that, if there's anything specifically related to pork or hogs.
Very good. Appreciate the update there. We just came into the open here. We'll get a quick readout. September corn's up a penny at 390.5. September soybeans are up 2 at 971.5, and September Chicago wheat is up 4 1/4 at 521. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. We look forward to talking to everybody tomorrow. Have a great day.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.